Hello, everybody. Welcome to the VA Loan Masterclass. We're going to enter into a deep dive here, cover the VA loan, get into some of the details, important things to know for you, someone looking to use their VA loan to purchase a home, and what we can offer you as both a lender and, as we'll explain here, can connect you with the realtor side as well. So, a little bit about WeVet is we have WeVet Home Loans and WeVet Realty. WeVet Home Loans, we specialize in the VA loan from the mortgage side of things. WeVet Realty specializes in connecting you with a realtor that knows how to work the VA loan. So with both of those pieces, you assemble your team, essentially your team that helps you go and buy a home with the VA loan. So that is the point of our business, to connect you with someone who knows how to get you the VA loan from the mortgage and the realtor. That's a little bit about us, the brief. This next slide here, this is Evan's contact. That is Evan. I am his assistant, subbing in for him today. His contact is on the screen. Go ahead and reach out anytime if you need us. You might also get connected with me as well. Evan's got a lot of experience with these VA loans. He's got a lot of experience in real estate. So we are here anytime. If that is something you need help with, please feel free to reach out. All right, so a little outline of what we're going to cover today. So we're going to go into some of the history. Okay, how did the VA loan come to be? We're going to go in through most common questions, right? Frequently asked questions from our customers. Cover some of those. We're going to get into the VA Loan 101, just some broad topics that a lot of people like to hear. Learn about the VA loan, give you some scenarios and examples, go over who qualifies, and lastly, I have all this knowledge. Now, how do I use it? How do I go win my home with the VA loan? So, starting with the history of the VA loan, right? It was a product coming out of World War II, right? So, along with the GI education bill, it was part of those legislative packages that created solutions to our vets coming home from the war and getting them readjusted into society. So obviously with the GI education bill, that was about getting vets educated, helping them go through school so they can specialize in whatever and get a job and get embedded in the economy. And the VA loan was about helping them get a home. And as we'll cover too, really the essence of the VA loan is the Bureau of the VA is guaranteeing your loan, right? And so this is kind of the essence of it, and it was created coming out of World War II back in the 40s. So as we were saying there, right, the VA loan guarantee, what that is about is when you take out a VA loan, there is an implicit insurance program being originated on your mortgage in the back end from the VA. Specifically, the VA writes a 25% insurance policy essentially on your mortgage, such that if you were to ever default, the VA would step in and pay the investors up to 25%, the investors who buy your mortgage, up to 25% of the loan amount to reimburse any losses that they sustain from your default. Right, so if you took out a $400,000 loan, right, let's say you take out a $400,000 loan, you pay back $100,000 on that loan, and then unfortunately, let's say that you just weren't able to pay the mortgage anymore. You had to go through a foreclosure, right? So you started with $400,000, you paid back $100,000. Now let's say they sell the house at a foreclosure and they sell it for $100,000. So where are we? You've paid back $100,000. They've sold the home for another $100,000, but they're out $200,000 on your $400,000, right? There's a $200,000 loss to the investors. Those investors could go to the VA and get refunded 25% of $400,000. They can get refunded another $100,000 from the VA, right? So all in, now their return on it is $300,000. That right there, that setup, it creates a system where the VA loan is literally a less risky loan for the investors who put their money into mortgages. And what does that mean in practical terms for you? That means that VA loan interest rates are lower than other mortgages, they're lower than conventional mortgages, because conventional mortgages do not have an equivalent insurance or guarantee coming from anywhere, any government entity or elsewhere. So that's what it means for you. You should always be getting a lower interest rate on a VA loan as compared to a conventional loan, and that when you're dealing with a lender that knows that, you'll get it. So, yes, sir. So, yes, sir. Yes, ma'am. So reach out to us, and we'll get you going on that one as well with the practical benefit of getting you that lower rate VA loan. And okay, so also too, what does this allow us to do? Right, this guarantee, it allows us to get the 0% down. Right, this is one of the implications from that is you get a 0% down from that as well. Right, there's not the conventional loans, you got to put 5% down. FHA loans, you got to put 3.5% down. Now with the VA loan, right, you can go 0% down. Also, there's no private mortgage insurer, right? So there's no insurance that you got to pay on the side with your monthly payments because that insurance is actually coming from the VA. So that's another benefit there. And as we were saying, lower risk, more competitive rates, lower interest rate. So common questions, right? What kind of common questions people have with the VA loan? Can you use your VA loan more than once? You absolutely can. Yes, that is definitely a thing. And can you have multiple VA loans? That is a yes as well. Now, there's a little bit of nuance here, right? If you only have one, if you're taking out your first VA loan, the VA is unlimited in the amount that they are willing to insure your mortgage for, okay? So your first VA loan, they'll insure your mortgage to any loan amount. Now, when you have outstanding VA loans and you're getting your second or third, right, you're getting your what they call subsequent use VA loan, the VA actually puts a cap. They put a cap on how much insurance money they're willing to put into those subsequent use VA loans. And what that practically means is there's a 0% down cap on those VA loans. So if you're getting your second or third VA loan, you have outstanding VA loans, you might run into a cap, right? Your cap might be $400,000, and anything you go above that $400,000, you're gonna have to bring a down payment to meet the difference. Specifically, you're gonna have to bring a 25% down payment. So if you got a $500,000 loan in this scenario, you would need to bring a $25,000 down payment. 25% of $100,000 is the difference. So that's how that works. But you can have multiple VA loans. There's just that nuance of being capped in the insurance amount the VA puts in there. All right, does the VA loan benefit expire? Nope, it does not. So if you've served in the military, you've got access to the VA loan, you got it for life. And does the VA loan have a size limit? As we just covered, no, you don't. But if you have multiple VA loans outstanding, your subsequent use VA loans, there can be a size limit, which means you got to bring that down payment. All right, and does a service-connected disability affect the VA loan? Yes, it does. It will actually give you further benefits to your VA loan. Specifically, the biggest closing cost, okay? The biggest closing cost, which is essentially a closing cost is essentially the transaction cost of buying a home. You got to pay it at close, right? It's independent from the down payment, all the different third parties involved with the real estate process, such as the title company, such as you got to pay your first year of homeowners insurance up front. Those are your closing costs, right? All those different costs you got to pay when you buy your home at close, the close date. When you have disability, the biggest closing cost on the table, which is the VA funding fee, will be waived. You won't have to pay it. And so that is one of the benefits of having a disability rating of 10% or plus. You will get that waived for you. All right, and can you use your VA loan while on active duty? Absolutely, yes, you can. In fact, that's the largest group of customers that we have is active duty military. That's who we serve more than anybody, and you absolutely can. Can National Guard members or Reserve, right? Can the Guard or Reserve use your VA loan? That's a yes, too. There's just a little bit of nuance there. You have to have 90 days of active duty service, and that active duty service does not include basic training, or you've had to have served for 6 years. 6 years. So if you meet one of those two, then you are qualified for the VA loan as well. All right, so getting further into VA Loan 101, right? So the funding fee, this is what we were talking about with when you have a disability rating, the VA will waive your biggest closing costs, right? So this is essentially the VA, how they fund this program, right? This is one of the sources how they fund this program of the VA loan is they charge a closing cost to be paid by you. And the good news on this, though, is you can roll this into the loan, right? You can roll this closing cost in the loan. You technically don't have to pay it at closing. You can just add it to the balance of your mortgage and pay it off in chunks every time you make a monthly payment on your mortgage, right? So here there's three points at the bottom, right? Who can pay the VA funding fee? Well, you can pay it by you, the buyer. You can have the seller pay it, right? If you're in a strong negotiating position, if you're buying a home and the seller is helping you pay the closing costs, they call those seller credits, right? These closing costs can also be paid for by the seller. If you get enough closing costs, you can get the seller to pay this VA funding fee on your behalf, right? So that's the second option of how you can pay the VA funding fee is the seller can pay them at closing on your behalf, right? And then third, as we talked, you can roll into the loan, right? You don't even necessarily have to pay it at closing, you can roll into the loan. And that is technically the only closing cost that you can roll into the loan, even though practically speaking, you can practically kind of roll into the loan, kind of now, but technically speaking, the VA funding fee is the only closing cost that can be rolled into the loan. All right, so how is the VA funding fee determined, right? What is the cost of it? Okay, well, it depends on two factors, right? It depends on, firstly, have you ever used your VA loan before, right? And that's first time use, as you see in that column, and then in the rightmost column, the subsequent use, right? So if you're a first time home buyer with your VA loan, your VA funding fee is actually going to be lower than if you used it before, right? Now, the second factor in determining your VA funding fee is going to be your down payment amount. So the VA actually gives you a discount if you bring a down payment. They essentially incentivize bringing a down payment on your VA loan, and specifically the numbers work out here. Okay, when you are bringing 0% down, okay, and you're a first-time home buyer, as shown right there, the VA funding fee is going to be 2.15% of the loan amount, right? So if it was $100,000, if you were getting a loan for $100,000, it would be what, $2,150 would be your VA funding fee. Now, if your subsequent use, if you've already used your VA loan, it's going to be more expensive. It's going to be 3.3%, right? So they drop it though, as we said. If you bring 5% down, they will drop that to 1.5%. It doesn't matter if that's your first time or subsequent use, both the same, right? So that right there is actually a thing we see a lot of customers doing, is bringing 5% down for that exact reason. It'll help you get a discount on your VA funding fee, especially if it's your subsequent use. You have it. You move from 3.3 to 1.5. You have your VA funding fee. So it can definitely be valuable to bring that down payment, especially at 5%. But with that being said, a lot of our customers go 0% down too, and that's 100%. Obviously, you can do that as well. You'll just have to pay a little bit higher on the VA funding fee. The last piece of that, right, is if you bring 10% down, they move it a little bit down further from 1.5 to 1.25. Okay. So that's for just standard purchasing a home. Also for construction, you see there on the leftmost column, that's for purchase and construction loans. So that's something about the VA loan as well, is you can actually build a home with the VA loan. And in this scenario right here, the VA funding fee, it's treated the same with the VA funding fee. Now, moving on to the cash out refi, the IRRRL, and the loan assumption, right? So if you do an IRRRL, which is just purely about lowering your interest rate on a VA loan, right? Rates drop, you can take advantage of that. We'll cover that more later. It's a really great program. It was built to be easy and cheap, and essentially sets up military members to take advantage of rates dropping in an easy way. Anyways, when you do that, it's 0.5%, the VA funding fee, right? And now a cash out refinance, that's not the simple just lowering your interest rate refinance. That's a refinance for different purposes. Maybe you want to pull equity out of your home. You want to convert your equity into cash to do whatever, you pay off credit cards or improve your home, whatever you want to do with that cash. That's going to be a different funding fee. Right there is shown, right? If it's your first time use, it'll be 2.15. If it's subsequent use, it'll be 3.3, right? And then loan assumption, bottom column, that is 0.5%, right? 0.5, same as the IRRRL. A loan assumption, what that means is you assume somebody else's VA loan. Let's say you're buying a home in an area with a large military population, such as Colorado Springs, such as San Diego. There's a lot of military members there. There's a lot of people that have bought homes with the VA loan, right? So you can find somebody that has a VA loan on their home, okay? Let's say they took out that VA loan in 2021 when rates were very low. You can assume their loan. You can literally take over their loan, right? They literally pass you their loan and you take over the interest rate on the loan. That's what an assumption is, okay? And you take over the same monthly payments on that loan. If that's the case, you're doing that, the VA funding fee is going to be 0.5%. So that enumerates that out fully. That's all the different scenarios on a VA funding fee and the different ways that you can use your VA loan. On to the next here. Certificate of eligibility, right? What is this? This is just a piece of paper. Don't worry too much about this. If you're working with us, we'll pull this on your behalf. We're set up on the VA portal, real simple to pull it for you. And that is just a piece of paper from the VA that says, Johnny Johnnerson, he is eligible for the VA loan, and here's the details. And we pull that on you for you, and it's just a little piece of paper, part of the administrative work of getting your VA loan, but no problem. Don't worry about that one. If you're working with us, we'll get it for you. All right, so the appraisal, right? What is the appraisal about? What does that all mean? So when you close the loan, when you get under contract on a home, right, you find a seller that you come to an agreement with and buy their home, right? You reach that point in the process. You will order an appraisal. The appraisal purpose of it is the appraiser comes to your home and they do a surface level basic inspection on the home, which we'll cover right here. That's the stuff with the minimum property requirements. And then they also pull comps. They find the most similar homes that have recently sold in your neighborhood, and they use those as data points to make a determination on what they think the price of your home should be. Okay? So they do those two things. That's their main jobs. Now, the thing we're covering here with these points is your home has to cover what's called the VA minimum property requirements, right? So this is essentially making sure your home is safe and habitable, right? The roof part of your roof can't be missing. The foundation wall can't be caving in. That's probably not going to pass the VA minimum property requirements, and that appraiser is going to call that out, and you're not going to be able to close as long as that's a problem. Also, some other issues, they get their pest inspections, right? They're looking for mold or for termites and inspections, etc., right? The appraiser will look for that, and that could hold you up if there's issues with the house. You might not be able to buy it with a VA loan, etc. There's some niche deals, right? If the home has a well or a septic tank, you got to get those inspected, etc. But that's the point of the appraisal. The appraiser comes there. They make sure that it passes the VA minimum property requirements, and they give their professional opinion of value on that home. Once you come to that point in buying the home, right, once you're under contract and it's time to order the appraisal, we'll walk you through all that. We'll order the appraisal on your behalf once you give us the go, once you tell us you want to order that appraisal, and that's that. So don't worry too much about it. We'll get you covered, but that is how that one works. Alrighty, so what's next here? Mandatory occupancy. What's that all about? That is real simple. That is just saying if you're buying a home with a VA loan, you got to live there. You got to live there. Can't use the VA loan for a secondary home purpose. You can't use the VA loan for an investment purpose, right? Now, with that, there is a little bit of nuance where you kind of can. What I mean by that is you can use the VA loan to buy a duplex, a triplex, or a fourplex, and you can live in one of the units and then rent out the other units. And so that kind of is an investment property, but you're still satisfying the primary residence, right? Also, too, let's say you're active duty, let's say you PCS down into Florida, right? You're serving down in Florida, and then you buy your home with a VA loan down in Florida, and then 3 years later, you get ordered out of Florida up to Virginia, right? So, and let's say you don't sell that Florida home, right? But when you bought it, it was a primary residence home. Well, you can keep that home still with the VA loan, and it's not going to be your primary residence anymore once you go up to Virginia, obviously. So that's a nuance there, right? But when you buy the home, you have to be intent on living in the home thereafter, right? That's the big picture with the VA loan. All right. So what are all the different property types that you can buy with the VA loan? We kind of got into that, covered that a little bit tangentially there. So you can always buy a single family home, right? A single family home is the most common home we see being bought, probably most common home sold in America type deal. You can also buy a condo, right? There's a little bit of nuance there. Specifically, the VA will have to clear the condo association before you close, okay? And if that condo association isn't already cleared, then we're just going to have to go through the paperwork of getting them cleared, right? It's going to have to collect some documents and turn that into the VA and get them cleared. So you can also buy a townhouse, right? You can buy the multi-unit, as we spoke, the duplex, threeplex, fourplex, right? You can also buy manufactured or mobile homes. Now, there definitely is nuance to that one, though, right? Specifically, the mobile home, manufactured home, has to have been built after 1976, because in 1976, HUD started regulating these mobile manufactured homes in a certain way. And before 1976, there's no guarantee that those mobile manufactured homes are built in a certain way, right? And so they're not willing to guarantee, the VA is not willing to guarantee the manufactured home if it was built before 76 for that reason. Okay. Also, too, the second nuance on that one is you have to own the land beneath you, right? So some mobile parks, you rent the land underneath you, right? You own the trailer, rent the land. Unfortunately, that doesn't work with a VA loan. You got to own the land. And then thirdly, the mobile home, manufactured home has to be affixed to the land with a permanent foundation, right? It can't be just on stilts or and not have a foundation set up type deal. So those are the three nuances you got to clear to do that, but you can, in theory, use the VA loan to buy a mobile manufactured home, right? Okay. So also, as we covered, new construction, you can build a home with a VA loan. That's a whole different animal. We do that one though. They call that the VA one-time close. You gotta be able. You can't buy raw land, as it says in the right column, right? You can't buy raw land with the VA loan, but you can buy raw land if you simultaneously have all of your plans ready to go, your builder lined up, and you start building on it immediately, right? So you can build a house with the VA loan. So what kind of properties aren't eligible, right? Commercial properties. You can't buy a strip mall with a VA loan. You can't buy a warehouse, etc. You can't buy raw land. Can't buy undeveloped lots. Can't buy investment homes, but you can buy the 2-4 units, right? As we covered, you can kind of buy investment homes if you're living on one side, up to 4. All right. So the EARL, this is what we were talking about earlier, the streamlined refinance. What is an EARL? An EARL is just, you take out let's say you took out a loan last year, right? And you took out your loan at 7%, let's say. Well, rates have dropped since then, right? And the EARL is the mechanism that the VA loan has to take advantage of that and essentially replace your higher 7% loan with the lower, let's say 5.5% loan, right? You just swap the two, right? You save money on your monthly payments that way, and it's very simple, very easy, and it was built that way. The conventional refinance, as we see here, is a little different. It's harder as compared to the VA EARL, right? Specifically, the conventional refinance will require another appraisal on your home, not the EARL, no appraisal, right? With the conventional refinance, you have to get your income verified. You have to essentially clear underwriting again. We would have to collect all your documents, run a credit check, make sure that your debt to income ratios are good. Do all that stuff that you went through when you bought a home. You'd have to do it again. Don't have to do that in EARL. Very simple. None of that. Okay. Equity requirement, right? You have to have at least 20% equity or something like that in the home before you can earn? No requirement, right? The only requirements is you have to drop at least half a percentage rate, and you have to recoup the cost of the refinance, because there are those closing costs again on the refinance. You have to recoup those costs in no more than 36 months, right? So those are the requirements on IRL. Credit score, right? Then as well. So it's real simple. We would just have to pull a soft credit pull on you on IRL that wouldn't penalize you in any way, right? Per the VA loan rules there, the IRL doesn't require a minimum credit score with us though, and we'll get into this point later about lender overlays. With us though, working on an IRL, you got to have above a 580 credit score, and you got to be current on your mortgage, right? You can't be delinquent on the current mortgage you're trying to refinance. So in the general with the VA IRL, there is no credit requirement, right? The VA doesn't give that, but per the lender rules that we work with, our lenders, our underwriters, you will have to have a 580, right? So that's that. And so let's get into some further scenarios and examples, right? Okay, and I'm seeing also there's some questions coming in. We'll address those questions here at the end of the session. So I got you on those questions being sent here. All right, conventional versus VA loans. So this is just kind of getting into concrete examples of the VA loan saving you money and getting you better interest rates and what that means for you, right? So let's just say, hypothetical example, right? On a conventional loan, it could be 6.5% interest rate, whereas on the VA loan, you're almost a full percentage point less on that. You're 5.63, right? So on $500,000, what would that mean for you? Well, first of all, you got to bring a down payment on that $500,000 with the conventional loan. Okay, that's $25,000, $0 obviously on a VA loan. Okay, what does that mean for the principal and interest payments? Right, you can be about $3,100 on that conventional loan, $2,800. You're saving, what is that, about $250, I think, about $250 on the principal and interest difference. Don't quote me on that. I didn't do that math right now. It might not be $250, but somewhere in that neighborhood. And then the mortgage insurance, right? You got zero versus 114. So there's another 114 difference. I can do that. 114 minus 0. All right, so that's a difference, obviously. And now mortgage insurance over the life of the loan, that's going to cost you about $16,000, right? About an additional $44,000 of interest with that interest payment, and then the $25,000 on the difference on the down payment. So that's, that could be $86,000 right there, difference saving you on a VA loan versus the conventional. All right. So who qualifies, right? Who qualifies for the VA loan? So anybody who served in the military has access to the VA loan. They can get a VA loan, but you have to qualify for the VA loan, and the rules on how you qualify for a VA loan depend on what lender you're working with, right? And this is what we're talking about with lender overlays, right? So why they call it an overlay is the VA loan has a basic set of rules. The VA loan has a set of rules. It's like a minimal set of rules type deal. Like we talked about the IRLs, there's no required credit score. That's in general for VA loans. The VA loan, nowhere in their rules do they say you have to have a credit score of X and above, or they give no number, But lenders, they can have their own set of rules. They call it an overlay. It's another layer of rules, right? And so a lot of lenders do have rules with what they require on a credit score. So example for us, a lot of the times working with our underwriters, if you got beneath the 620 credit score, sometimes it works. Most of the time it won't though. So 620 is kind of like a minimum credit score for us. Now sometimes it works, but I want to bet on that. So that's an example though of a lender overlay, right? So going back to it, who qualifies? You got to just reach out to your lender, and you got to go through their process. You'll have to give over your documents for pay stubs, etc. Your lender will have to pull their certificate of eligibility. They'll have to run a credit check on you, right? We'll be able to run a soft credit check on you. What that means up front, we'll be able to run a soft credit check on you. What that means is soft credit checks don't ding your credit score, right? When you run a credit check on you, a hard credit check, it'll ding your credit score, usually somewhere in the realm of about 5 points, and usually it comes up pretty quickly. But We'll be able to run the soft check on you up front. Big picture, what I'm saying there, you got to qualify. You got to go through all this stuff. Your lender has to put you through an underwriting system up front. Okay, they call this automatic underwriting system is what most lenders use, and they got to tell you qualify, right? So big picture there is just reach out to your lender, reach out to us. We'll get you going, and we will let you know if you qualify for your loan. So that is that. All right, so now there's, right, how do you use this knowledge? How do you go win a home with the VA loan? Well, one of the first steps is working with the right team, assembling the right team, right? As we talked about in the beginning. Big piece of that team is your lender and your realtor. And so there's a lot of lenders and realtors out there, and it is 100% up to you who you want to work with. But we use the VA loan. We specialize in the VA loan, and if you reach out to us and trust us and work with us, we will do our best for you. The thing about the VA loan to kind of think about too, right, is take any random home being bought right now in America, right? Most of those homes are not going to be bought with a VA loan. Just literally at random pick a home being bought right now in America. Probably not going to be a VA loan because most people don't serve in the military. Most people don't have access to their VA loan. They don't have access to it. They've never served in the military. Thus, a lot of lenders, a lot of realtors who are just embedded in their local community, right, just working for the people that they in their community, they don't see VA loans too often. It's kind of a niche deal. Now, with that being said, it's a very simple loan to work with, but if you never come across it, right, you might not know how to use it. So that's something to know, and it's something to be aware of when you work with someone with the specialized knowledge on the VA loan in both the realtor and the lender piece. It can be a big help. It can help you win your home. So that's kind of that one, and we appreciate you tuning in. Well, let's hop into the Q&A here. Let's go from Billy. From Billy. How we veterans love you all. We love you, man. Thank you for that. For VA Earl, does the funding fee get waived if you have a disability? Yes, it does. Yes, it does. The VA, it gets waived if you have a disability. So from Billy there too, what if the VA appraisal value comes in lower than what you were purchasing for? If there is typical radius for house comps. Exactly. So if the appraisal comes in lower, then Billy's asking, what if the house under appraises, right? What if the appraisal comes in lower? That can actually cause some issues. Now, with that being said, there's essentially a mechanism called the Tidewater, which we will use to try to prevent that from being an issue. What I'm talking about here is if you're trying to buy your home for $350,000 and the appraiser says it's only worth $340,000, you're only going to be able to get a loan for $340,000. With that being said, the appraiser will reach out to us and they will give us a warning, hey, the home is about to underappraise. Then we can turn around to that appraiser and essentially give them new data. We can give them new homes that we think support the idea that this home is worth $350,000. So we can try to, through this process, persuade the appraiser through giving them this data to consider of these different homes that it is indeed worth $350,000. That's called Tidewater. But big picture there, if your home underappraises, it can cap your maximum amount that you're able to get on your loan. So that's how that one works. Also from Billy here, since this is a masterclass, other item related to the first question, when doing an IRRRL, if I lost my job, yep, exactly. So good question. Billy's asking if you're doing an IRRRL, right? Let's say Billy's saying, what if you lose your job? Can you still do an IRRRL? You got into the home, you had this job, now it's not longer the case. Well, right, can I still take out a new loan? Yes, you can, right? There's no income requirements, so no problem. There's no income check, as we talked about. You can do that IRRRL. It's no problem. As I said, the only rules working with us is 580 FICO score, and you have to be current on your mortgage. You can't be delinquent. So, and then from Megan, if you can use it to build a home, if the plan is to put a pre-built tiny home on it, is that okay? So the tiny homes can you use the construction loan for a tiny home? That one can get a little nuanced. It can depend. That one can depend. So there's no real general yes or no on that. Just reach out to us. Depend on who the tiny home people are and a bunch of nuances. So on that one, Megan, just reach out to us and we'll determine that one depending on your specific tiny home there. And then from Ken, can I put an offer on no repairs required from the seller? The VA needs to be fixed. Okay, can I? From the seller. Closing. Who should pay? All right, so Ken is asking, can I put no? Before closing. Yes. Okay, so can I put an offer on no repairs required and the seller needs to be fixed? So yes, you can start the process of buying a home, right? And then the appraiser calls out what needs to be fixed, right? For example, we've seen an appraiser say that in a basement there needed to be a handrail installed before it closed, right? And then that just has to be done. So appraiser could call out an issue that needs to be fixed, and then it just needs to be done before close. And also Ken is asking who should pay for that, right? It just depends. It just depends on your negotiation process and what's going on. Whoever you negotiate with, like however you want to settle it with the seller, right? It just depends on a case-by-case basis. You can pay for it, they can pay for it, however it goes. Per the VA loan rules, it could be either one, right? So that's how that works. And I think if that's everything here, everybody, we appreciate you tuning in. Thanks for watching the VA Loan Masterclass here. I hope it was useful. Please feel free to reach out at any time. This is our contact, right? You'll get a hold of Evan via that contact number. You might get in touch with me, though, as well. He might put you in contact with me. That's his email. Those are some QR codes. We'll also get you connected with a VA loan specialist realtor if that's what you need. So reach out either way. Mortgage, realtor, we got you. Thank you for tuning in here. We really appreciate it if you allow us to work for you and trust us with your mortgage. And I actually think, hold on, we might have one more question here. Yep, we got another question. So, as an active before closing, an active SM. So I'm not understanding that one there. Oh, Lumi, I'm sorry, I don't understand your question. Just give me a call. Give me a call, and we'll get it fixed there. So just give me a ring, and we'll figure that specific question out there. But I appreciate everybody tuning in. We appreciate if you trust us working for you with your VA loan. My name's Spencer. Hope to be speaking soon, and we'll be speaking.